Rong Ren is the CEO of Harvest Capital Partners, which is in the process of raising up to $800 million as they roll out a couple of PRC retail-focused property funds. Morning, sir.
Morning.
I'll bet when the PBOC announced that they were tightening the reserve ratio, you went, no, don't do it right now. We're trying to raise money.
We said, welcome. This is very anticipated, and is part of the program to make the market more sustainable in the future.
But they did it right in the middle of your rollout here. I mean, they could have done better timing. They could have waited a little while, couldn't they?
Well, I think it's only part of the program. I think if you look at all the issues, policies issues today, there were the policies that issued back in 2007. So no surprise to us, and we believe that it's part of all the objective setting that they would like to curb the market before it's getting out of the mind. So I think that's you're anticipating some other programs to be launched by the government very soon.
You're in the process of rolling out a couple of funds, raising about $800 million. How close are you to target right now? How's it going? How's the process?
We just launched it a week ago,
right.
And we are targeting at the China retail shopping mall sectors. We're very confident that we'll be able to close it in a very short period of time.
The participation in the retail and the shopping mall kind of arena in China is something not lost on your peers. A lot of people participated in this. A lot of the tycoons are involved in developments beyond the major eastern seaboard cities. What's going to be different about your approach into the market?
We started this concept like 12 months ahead of launch, and we were very confident that this is the right product for the right market. That will give the very high return to our investors for at least 5 to 10 years time horizon. So we were slightly ahead of many people, but the key concept here is that we're utilizing all the internal resources of China Resources Group, which is the parent company of Harvest Capital, to work together to make this fund minimum risk to the investor, but also very consistent return to our investors.
Now, the fact that a conglomerate like the CR Group is the parent, what does that actually mean functionally to Harvest? What does it mean to the way you do your fund, and how hands-on are they?
Well, they have been the GP, they have been the sponsor for all the three funds we're managing today. They're wonderful sponsor, and they're the fact that one of the largest developers in China, one of the largest retailers in China, give us tremendous competitive edge over many of the other funds in terms of knowledge, in terms of the risk management, deal sourcing, government relationship, banking relationship, branding, etc. And they don't normally say yes to us at all in the past 3-4 years, but they always remind me of the risk ahead of us. So I think it's a wonderful fact to have as a sponsor group. And
you are specifically targeting secondary and third line cities. What does that mean? I mean, just for those who may not know the entire landscape, we talk about like the Dalian, Chongqing, as opposed to Beijing, Shanghai, Guangzhou, or what are we talking about in terms of?
You're absolutely right. We are talking at the second to third tier cities, but in the key locations of the city, and to make sure we have the space that will give us the return, consistent return for a long period of time. We may not be able to target key locations in Beijing, in Shanghai. We're certainly looking at the second-tier cities, because for shopping mall sector alone, you have two sectors. One is top end, one is the middle to high end, which is exactly what we're targeting at. They're both making sense from the financial perspective, but regional shopping center, which we're launching today, is making more sense for a fund with a life of 5 to 6 years. Top end shopping centers, we have a financial sense after 10, 12 years time.
And you're targeting 12, 13, 14, 15% return. Is that does that mean you're going to take on a tremendous amount of beta in your efforts to nail down ROI of that sort?
Not at all. For the income fund we're targeting, we have got a stabilized return from 40% of which coming from the multinational corporate. For the development fund, we're cookie cutting every shopping malls to be injected into the income fund in the future. I don't think so, because we all have the almost like full lease before the construction even started.